All right, let's talk about reversal style trading today, right? Let's get right into it. And one thing I want to be very clear from the start, right? This explainer is not about trying to predict tops or bottoms. It's a framework for survival. Most young traders and inexperienced traders do not understand that there are different market environments and volatility conditions. So they start with the hunt of bottom ticking and top ticking trends, and they get stuck in that framework for months or years until they start until they start using a framework to have specific frames and models worked around that, right? And specific rules around the position size and how to enter and add to the position to use it in a reversal area or a trend or a range or a reversion style environment. They usually just go through this crazy loop of not consistency, right? So this class will be used, and we're going to use one of the highest statistical time frames for a reversal. And this is all based off of 20 years, right? And I'm going to teach you a proper way to trade a reversal between 9:30 and 10:30, right? We're going to break down a very specific risk management model within it that's designed to help you navigate one of the most dangerous trading environments of the day, right? And this is all about staying in the game while the market figures out what it wants to do. So let's start, right? Why do so many traders just get absolutely crushed trying to capture reversals? We've all seen it. We see people on Twitter all the time trying to flex, right? Some of us have done it ourselves. I know I've personally got in this trap as well, right? The reason is actually pretty simple from what I've understood, right? The single biggest mistakes traders make is they use trend style risk in a reversal environment. Right? Think about it. When you're in a trend, the wind is at your back, momentum is your friend. But when you're trying to call a reversal, you are literally standing in front of a moving train. You're fighting momentum, right? Whether it's the daily, the overnight, the 12-hour, the 4-hour, the 3-hour, the hour, right? You're trying to use the same playbook for both a trend, a reversal, a range, a reversion style market, right? The strategy, right, is wrong, right? Your risk profile is wrong, right? And reversals require very, very delicate ways of entering because like it is fading that momentum, right? And it requires you to carefully position size in. And like one thing we don't do is we do not put a full position on at the reversal because you know you're going to get stopped out, right? More than likely you're going to get stopped out and it's going to take 2 to 3 attempts for that if then statement to actually play out for that reversal. So you start with building starter positions that you can add to. But if you get stopped out, you're not getting stopped out with a full position. So when the actual reversal comes, you're not mentally drained and loss of confidence and all that, right? What we're hunting for, we're going to talk about the 9:30 to 10:30, right? Is the major pivot. And the major pivot isn't just the highest or the lowest price on a chart, right? It's the exact point where control actually transfers, right? It's a structurally shift, right? You're going to see the elephant step in the room, right? And if you can get this major pivot, right, and we'll talk about the stats in a little bit, right? You're going to leech off of this for the next couple of hours, if not the rest of the day, right? The problem with this is it's a fatal mistake. If you've been in the markets a day or two, you'll realize that everybody knows about the 9:30 to 10:30 pivot, right? The problem is people try to predict this point instead of waiting for the market to prove it to you, right? So even though this is one of those cases where there's edge and everybody knows that edge, but like they try to predict the exact top candle or the exact bottom candle, right? And the 9:30 to 10 o'clock isn't the time to do that, right? You have one problem to solve, and is this going to reverse? And where's the proof of it, or is it going to continue momentum, right? Uh, because like I said before, if you get this pivot right, you're going to leash off of that information for the rest of the day, if not the next couple hours, right? The probability of the major pivot forming, let's talk about some stats, isn't all that random, right? I looked at the last 4,499 days and saw that 31% of the time out of that 4,499 days, we put the high day or low day between 9:30 and 10:30. Out of that same amount of days, 65% of the time, we put the major pivot in for the next 3 hours. And using the 12-hour cycle of 06 to 1730, right, we saw that it was 58% of the time, right? Now, what we're going to do, what I even did further is I took the 9:30 to 10:30 and I broke it down into 15-minute segments, right? And then I put stats on those when the major pivot came, right? And what we saw was, right, the most common major pivot occurred between 9:30 and 9:45. So if you think of this as those 5 trading days of the week, you can expect that 2 to 3 times a week to put that major pivot or that high day, low day in 2 to 3 times. The second most was 9:45 to 10. If it was going to put a major pivot in and not continue momentum, the second most common is 9:45 to 10, and that usually happened between 1 to 2 times a week. The less common times was 10 to 10:15, right, which would happen 1 to 2 times every 2 weeks. And the least common was 10:15 to 10:30, which would be maybe 1 to 2 times a month, right? And then just like all data, you had times that did it after 10:30, but it wasn't enough data to like build business plans around. Right, so statistically, we see two things to be true, right? Either we're going to put the major pivot in between 9:30 and 10:30, or we're going to continue momentum. The higher probability is that we put a major pivot in, right? And then we saw that 33% of the time, that major pivot would be the higher day, lower day, right? We saw that 65% of the time, it would be the major pivot for the 3 hour, right? Or 58% of the time for the 12 hour, right? We broke them up into 4 15-minute quarters, and we saw that between 9:30 and 10 is the most predictable time to do that major pivot, right? So this predictable pattern is the first piece of real information that we can build a risk model off of. And here's the paradox, and this is the key to the entire framework. That same window with the highest probability is also where momentum is strongest. 9:30 to 10:30 is where the most easiest but biggest volatility comes consistently daily, right? Emotions are high for younger, inexperienced traders, so they're more likely to make mistakes. And like the first couple of reverse attempts fell. That's why jumping in with full size is so destructive, right? All right, so like you have to have the right mindset into this. And what we're going to teach you, all right, is this 4-step reversal that we do every single day, right? But before we get into that, you got to go into this with the goal of not being right on the first try. The goal is to survive the initial failure. Because what you'll see around this 9:30 is you can lose 2 times, but the third one will make up for the first two plus chicken dinner, right? So you're going into this expecting to be wrong, but that's why we position size correctly. So we can preserve capital until the market proves to us that it's ready to reverse. So how do we do that? We don't use opinions, we don't use feelings, we use objective, non-negotiable reference points that the market gives us, right? Anchors. And so step one, we're going to use the 9 o'clock high, low, and mid, and we're going to use the 9:30 1-minute candle. Step one, right? Can we get above or below 9:30? So if we're heading up, can we get below that 9:30 1-minute candle? Right? Step two, can we get above or below the 9 o'clock midpoint? Even if it's from 9:30 to 10, like that midpoint, if this major pivots in, then we should be able to get between 9:30 and 10 or after 10, right? We should be able to get below that 50%. Right? Step three, can 10 o'clock take out the 9 o'clock low? And step four, can we make one of those statistical highs that 10 o'clock is known for? Like if you haven't watched the video, me talking about statistical highs and lows in the hour, go rewatch it. But in the first 15 minutes, it's typical that we put in a higher low in that time, the first 15 minutes, and then we expect the Q4 of that 10 o'clock hour to put in the other side, right? Now, most young, ignorant retail traders would say, oh my gosh, that is not, if I wait for all four of those steps, I missed half the move, right? And I'm not saying that you wait for all four steps to take your first position. I'm saying that you position size smartly around these four steps. And because you're fighting all the overnight 12-hour, 4-hour momentum that was going up, right? So now you want to make sure that you're doing this in a smart way where you're not fading momentum with full size, right? But this is a sequence, right? A checklist. We can do this any hour of the day using the O5 box in the previous hour 50, right? But we just know I want to teach it at the most statistical time of the day that's going to happen, right? All right, so moving on, right? Scaling in, right? We start small. We take our, like, your risk per trade to certain conditions where you do 1%, 2.25, half a percent, right? If most of your normal trades are 1%, you're going to take a fourth of that 1% risk per trade of the account size. And you can start with putting a fourth of that in once we get below 9:30. And then another fourth once we do step 2 and get below 9 o'clock's midpoint. Step 3. Oh, that's another thing. Like, these 4 steps can be done in any order, and you'll see that they get done in multiple different sequences. So don't think step 1 through 4 has to be done in order. Step 4, you can add another fourth and then another fourth of the 10 o'clock taking out the 9 o'clock's low, right? And then the reason we do these 4 steps because that statistically has locked in this as the major pivot and possibly the high of the day. So you're going to leech off of this information for the next 3 hours once these 4 steps. You're going to know, hey, I saw a 4 step reversal to the sell side, right? I set the conditions for my success by displaying patience, by position sizing correctly in a reversal. And now, once these 4 steps are done, you know momentum is down and the trend is down. Now you can start turning on trend models and position sizing into that. But what I will tell you, right, most champions and good traders will tell you it wasn't until they learned how to turn systems on and off in the right market environment and position size in the right volatility condition, and then add to winning positions and let those things run and let the market tell them when to exit the trade. That wasn't once they achieved those things, that's when they started becoming real good at compounding growth, right? So with that being said, right, that's the class. And let's wrap this up, right? The 4 step framework isn't a setup, it's just a risk management model disguised as one. Its real job is to build discipline, objectivity, and a survivability for your trading, right? Because once you master this in the most chaos environment of the day, you can apply it anywhere. But it all comes down to this: a professional trader operates on process. If this happens, I act. If this doesn't happen, I don't. There's no prediction, there's no ego, just structure. That's how you survive and that's how you thrive, right? So start taking that professional mindset shift, right? And then the closing advice, right? If we can't do these 4 steps, then that's just easily the market telling us that it wants to continue the momentum, right? Pay attention to that, right? So the goal is confidence in your process, not relying on anyone else. Do the work, write it down, track your rules, follow the 4 steps, and leash off of it that major pivot for the next 3 hours or the rest of the day. With that being said, that concludes this class. Later, haters.